Welcome to Financial Management for Real Estate Investors and Wholesalers. The principal aim of this program is to help people in real estate develop financial skills that can make your business and investment management tasks easier, facilitate greater leverage, lower the effective cost of funds, improve profit per deal, minimize the burden of tax, magnify net returns, and provide you with an ongoing earnings of $1 million annually. There are a multitude of ways to make money in real estate. The approach you will be shown is an integrated management approach. There is not one magic bullet alone that is sufficient for you to excel in this business, although there are some areas in which you might have a particular talent or advantage. However, unless you develop wide-ranging skills and have a firm grasp of the various aspects of this business, you will only become mediocre at best. The statistics are 90% of all new businesses fail within 5 years, 50% in the first 2 years. To beat the odds, you have to work smart, and don't think for a moment about working less. I am only interested in people prepared to work as Trojans for the first 2 years. After that, you can ease off and enjoy the fruits of your labor. Not so long ago, a member of one of the online groups made a comment extolling the prowess of so-called gurus, saying they were so successful that they paid heaps of tax. My response was, that merely demonstrated the gurus' inability to successfully manage the financial side of their business. In addition to the hundreds of thousands of dollars they threw away needlessly in tax, they were also throwing away millions of dollars which they could be making by using the wasted money, which could at least have bought their wife a diamond, paid for their kids' and grandkids' education, bought a leveraged portfolio of property and shares, or developed their business by giving bird dogs the money instead of it draining away down the rat hole. A good bird dog that you pay $5,000 a month might easily bring you in $10,000 more earnings. The name of the game is not just saving tax. It is employing tax as a valuable financial resource, the cheapest source of capital, to make more money, develop your business, and create wealth more rapidly and with less risk. After all, say you can invest tax dollars back into your business but make a loss, you get to claim that as a further tax deduction without being any worse off. However, if you fixate on the tax angle, you will miss out on the broader, bigger picture, which is to create wealth. Being able to manage your tax position simply provides more bullets for your attack on the market and investment opportunities. Ever seen an opportunity that had a glorious potential but you were out of ammo? The moral is, keep your powder dry and save your bullets. Before launching into the program details, for those who do not already know who I am, my name is Dean. I have an investment banking background, in corporate finance, asset protection, and tax law. With 30 years experience in designing financial products, investment and corporate management, and business building with insurance companies, real estate developers, and securities firms, coupled with 30 years of university degrees, including 2 masters, there is a lot of cross-fertilization in my arsenal of ideas and concepts that most people are not fortunate enough to have. Prior to getting into Wall Street, I worked as a government economist and town planner. I was a corporate member of the Royal Australian Planning Institute and hold a Master of Town and Country Planning degree from Sydney University. For quite a few years I gained a myriad of professional qualifications and worked as a college lecturer, real estate and finance broker, financial planner, securities dealer, and Supreme Court barrister. For the last 15 years I have worked for the World Health Foundation, principally managing their investments. Just prior to the 2008 global financial crisis, I helped incorporate the Gold Reserve, registered in Hong Kong, and a small hedge fund. The fund has about $250 million under management, and there is close to $2 billion in the Gold Reserve. If you care to join me, I shall show you how you can draw unlimited money as you want to meet personal expenses and pay little or no tax, leaving your assets intact to grow, also for the main part tax-free. Why am I doing this, you might ask? I have 2 goals. As a teacher, public servant, and socially concerned citizen, I have wished to do more for the welfare of others for most of my life. This was my mother's principal motivation in life and the reason for me choosing to become a government planner, but lamentably disillusioned by the corruption I saw from the inside and in which I was asked to assist. Ultimately, it dawned on me that I needed to work in the private sector and started helping people on a personal level. At times this was through donations, but as you no doubt know, it is better to help people learn to fish. So grab your rods and reels. As no one lives forever now, I wish to impart the valuable knowledge and skills that I have gained, for the benefit of others, with the hope that you might assist in my main goal, as follows. 2. My principal ambition is to secure the financial position of various foundations and other charitable organizations. The future of many worthwhile benevolent groups is becoming more uncertain due to problems governments are having with their budgeting and the inability of communities to self-fund. Therefore, it is imperative that a financial legacy be built that can help sustain the much-needed work of community and special purpose groups. If you are empowered so you can secure your own family's financial future, then you will also be able to assist people less fortunate. Financial Management Lesson 1B. Okay, so much for the preliminaries. There are many concepts to show you and a lot of techniques for you to learn. The best way to learn something is a practical exercise, and for that there is nothing like the real world. Dive in and you must learn to swim. There is no other option. The lead product is an approach that I have used for over 20 years, for the acquisition of properties from home occupiers and also from developers wanting to clear stock. While the objective is always to buy below market, for resale, we do not need to go as low as other wholesalers to make more money after tax. We can drag out more cash at settlement and either pick up tax credits or pay no tax on profits or both. There is no seasoning required as it happens instantly. The end buyer does not see how much we make on our deals, and lenders will provide more finance to us for the end buyer. The approach is best matched by having a waiting eager investor whom we have cultivated, and that will be dealt with by another 4 products. But let's do the first for starters. You need your thinking hats on as there is some math, multiplication, division and percentages. If you resort to calculators instead of thinking, your learning will be impaired, so please either do the sums in your head or just with pencil and paper. In the example that follows there are certain assumptions which can be varied to present alternative scenarios. After you understand the basics, you can then look at the various elements and learn how you might vary the way you utilize this concept. The concept is one that was developed as a result of looking at a marketing strategy for a resort I was involved with. There were actually 3 objectives. 1. To increase occupancy, get more guests. 2. To equip the dive shop. 3. To reduce operating costs. The approach was simple. Just offer resort accommodation to people who could send us guests by making it extremely financially rewarding with a massive discount on the room tariffs, which they could sell to their customers for full price. For example, A. We swapped our heavily discounted accommodation for diving equipment, beer, and spirits and anything else we needed, mainly food stuff. The rooms were vacant and earned nothing when not occupied. B. The suppliers were happy as they had dual benefits, the profit on sale of our rooms and the sale of their goods to use. C. In some cases we supplement our accommodation with part cash payments when necessary. D. Thus the concept of trade credits was born. Next, after the initial success with the resort trade credits, they were then used to purchase 7 brand new condos direct from a developer who was hemorrhaging. Through negotiating, the developer agreed to sell the group of units at a 40% discount to valuation. As the accommodation credits were obtained by our investors via a loan, with very attractive terms, they were able to pay the developer his $240,000 per unit and have an additional $80,000 from the bank lenders, used to service the loan interest for X years. The developer was not interested in the resort credits, so they were written off as a loss to provide a tax offset. Subsequently, over a number of years, those trade credits have been used as deposits for a number of properties. Sometimes the accommodation was used directly, sometimes they were sold to travel agents, and some were just wasted. With the popularity today of gold, alt currencies, Bitcoin, and businesses like Bartercard, the trade credit concept has been refined, and although the resort is still available, there are more advanced, more fungible variants of the trade credit now. For an introduction to the concept and its popularity, there are videos posted at tradecredits.in.
They've bounced back from recession and their profits are up by as much as 160%.
I think what we're seeing now is a real urgency to move. People are going, well, if I don't move now, then actually house prices will go up.
New homes are hot property, but this is an industry like no other. And house builders have to cope with a mass of contradictions. To customers, they're selling a dream.
That home is critically important to you and it's aspirational. You want to be proud of it.